All right. Thank you for joining us, everyone. We've got a few people here and more joining. We've had the last I checked, we had over 30 people who had registered. So hopefully a few more trickled in after that. But my name is Jamie Bateman. I am the owner of Labrador Lending as well as the Integrity Income Fund, and we invest in first lien mortgage notes specifically. And we can get into that in more detail in a minute here. And I'm joined by Jack Malpass of Next Generation Trust. Jack, how are you doing today?
Good, Jamie. Uh, Nice to meet everyone.
Yeah, we're gonna do a little review here of this presentation is your guide to tax advantage mortgage note investing with self-directed IRAs, and we're gonna get into some of the disadvantages of mortgage note investing, which is a little counterintuitive for someone who typically promotes, uh, for someone like me to talk about, who typically promotes the advantages of mortgage notes and why I think they're a great asset class. But we'll get into that in a minute. Uh, Basically, I'm going to present some slides, then Jack is going to go through some slides. Specifically, be talking about mortgage notes specifically, and then Jack will be talking more about self-directed IRAs and similar type accounts, and then we'll wrap it up with some additional slides. The Q&A, I believe, is turned on through Zoom here, so if you have questions, pop that question into the Q&A section, and we'll get to it at the end. Here's a little bit more about the two of us. And Jack, can you still see you and me?
Yes, sir.
All right, perfect. I think we have another disclaimer slide later on, but just to be clear, neither Jack nor I are attorneys, accountants, or financial advisors. None of this is to be considered financial advice or legal advice, and we don't pretend to be attorneys or accountants or financial advisors. This is for educational purposes only. So I'm not going to read every bullet here, but this is what we're going to cover. Um, I really believe that the combination, the marriage between mortgage note investing and self-directed IRAs and similar type accounts is a great one, and you're going to see why here in a bit. A little bit more about us. Jack is the business development specialist or a business development specialist at Next Generation Trust. I think the senior business development specialist, and he's an expert in self-directed IRAs and alternative investments such as mortgage notes and other asset classes. As I said, I'm the founder and CEO of Labrador Lending, and I am a former Army officer and a real estate investor. My wheelhouse really is residential real estate, buy and hold real estate, rental property investing, as well as mortgage notes. And a little bit more about me here. Again, not going to read this slide to you. You can read it for yourself. Since 2018, I've been heavily focused on notes, specifically first lien residential mortgage note investing. We dabble in a little bit of similar debt investing, but that's a little bit about me. And then the power of mortgage note investing. Speaking of which, on our website, labradorlending.com, we have a free ebook that's 74 pages and it goes in depth on mortgage note investing. Really should have been probably 5 ebooks. So I do recommend you go check that out. The title of the ebook is The Power of Mortgage Note Investing. Um, I really kind of, I don't want to say stumbled across this asset class, but after spending years in the residential landlord space, uh, pivoted to the mortgage note investing space, and I absolutely love it. So the for those unfamiliar with the asset class and this strategy, we don't typically originate loans. We buy already originated debt, and we become the quote unquote bank or lender. And so that underwriting has already been done, and that origination of the note has already been done. But we then buy a previously originated, in our case, first lien mortgage note, could be performing, non-performing. And as the slide says, we take on the shoes of the bank or the lender. So we're not buying property, we're buying the debt. It's a lot more nuanced than that, but that's the simplified version. It's mortgage note investing is considered an alternative investment, and again, Jack can talk more about other types of asset classes. And so, one of the benefits to getting involved in mortgage notes and buying mortgage notes, and we're going to talk a little bit about some of the ways you can do that, is that you diversify your investment portfolio. So this is outside of stocks and bonds, and it's outside of traditional real estate investing. On the right side of the slide here, you can see that we're talking about control versus ownership of the property. So with traditional real estate investing, and when I say that, I'm talking about buying a single family residence as a rental property. Most people are familiar with that concept, that strategy. We're buying the debt, we're becoming the quote unquote lender, and the borrower then owes payments to us. So we actually end up having, in our case, a first lien position on that property, and so we control the property without having actual ownership of the property. There's several advantages to doing this, and we don't have to manage the property. We don't deal with tenants, toilets, and trash. We're dealing with the paper, and a borrower, and then the physical real estate is our collateral. So pros and cons to every strategy, and the control versus ownership is one that I see as largely a pro. Some other pros that we find along the way here, especially in our current economic climate, is the potential for higher yields. So notes offer attractive returns with collateral, backed by collateral. So, when you're buying a stock or share, you don't get that same level of collateral. You don't have hard physical real estate backing your investment. So if we buy, a first lien mortgage note for, say, that is worth $50,000, the property value may be $150,000. That property is our security, and notes still do offer attractive returns. So there's potential for high yields with security. Number two, there's increased opportunity here, given today's economic climate. Banks have really tightened up their origination standards, their lending standards over the last few years. That's opened up a lot of opportunity in the private credit space and the seller financing space specifically. And also, delinquency rates are starting to tick up again. They're not high, but they are starting to tick up again, and there could be increased opportunity for those who are interested in buying non-performing notes. And we're not going to get into all the weeds on how that works, but there's a lot of opportunity to buy at a discount when you're purchasing a non-performing note versus a truly performing note. And then, as we alluded to earlier, a third benefit in our current economic climate and always is diversification. With note investing, you're not tied to the whims of the traditional stock market. And so there are many ways that you can diversify through mortgage note investing across property types, across borrower types, across states, which is a big one. And so just having an element of mortgage note investing in your portfolio can be a strong way to diversify your portfolio. I still own stocks and bonds. I'm not anti-traditional markets, but I think just having that element of diversification, can help you sleep at night. So just on a basic level, a mortgage note is a legal document that is a contract between a borrower and a lender. It defines the terms of a loan. And again, in this context, we're talking about real estate or mortgage note investing. And in our case, first lien mortgage note investing. And the note itself then has another document that's the security instrument, and that security instrument ties the note to the property. So that's what actually collateralizes the property. Again, not getting into the weeds here too much. In most states, that's going to be called a deed of trust or a mortgage, depending on whether this is a judicial or non-judicial state. In some states, like Georgia, you may have a different name, a security deed. But the note itself it's a fairly short document, typically 3 pages or so, and it just simply identifies the terms of the loan, meaning the loan amount the interest rate, the amortization schedule, if it's amortized, et cetera. When is the maturity date? And then the uh, mortgage or deed of trust is actually the collateral document that ties that mortgage note to the property. And so the borrower signs the note and agrees to the terms. So we're going to go into a high level comparison between rental property investing and mortgage note investing. And specifically, we're focused on the tax advantages or disadvantages. And pretty soon, Jack's going to come in and talk to us about how this all fits in with the self-directed IRA option. But as I mentioned, I have experience in rental property investing, and the way the tax law is written, the tax code is written, is that owning real estate, such as rental property, comes with it certain tax advantages. Okay, so you can deduct your mortgage interest, your property taxes as an expense. Depreciation is a big one that people talk about. And so without, just buying a rental property in cash with outside of a self-directed IRA, it already has inherent tax benefits for you as an investor, as a property owner, as a landlord. Mortgage notes, however, do not come with any inherent tax advantages. You do see people argue whether mortgage notes can come with them, can bring long-term capital gains, et cetera. But at the end of the day, you don't get into mortgage note investing for the tax advantages. They're just not there. You're typically taxed at your ordinary income rate. Again, I am not an accountant, an attorney, et cetera. But mortgage notes do not offer inherent tax benefits. So that could turn some people off. And like I said, every asset class has pros and cons. The tax advantages of, if you're looking for a tax advantage, mortgage note is investing is not your go-to in and of itself. But there's always a way around it or a way to solve the problem. So this is another way of looking at a similar information. Rental properties do offer tax benefits. Mortgage notes really do not. So another slide, essentially stating the same thing. All right, so the solution. What do we do about this problem that mortgage notes don't solve for us or that they present to us potentially? That's where Jack and companies like Next Generation Trust come in and can help us. We have here on the second bullet that there are many ways to, it alludes to the fact that there are many ways to get into mortgage note investing. In our case, we buy whole notes and we have a fund that buys those notes. But you can also buy partials, or you can be an investor in a fund where you're not making the day-to-day decisions, but you're putting your capital to work, such as our Integrity Income Fund. I actually did a presentation as just last Friday as part of the Cash Flow Expo, the 7th annual Cash Flow Expo. I recommend you check that out, and we have a link for that if you contact us. But the reason I bring that up is I went through whether mortgage note investing is passive, and because a lot of the gurus will kind of claim that mortgage notes are passive, it's mailbox money, so easy. And the truth is it can be, and there are ways to do mortgage note investing passively, but there are also many ways to, I spend a lot more time on my mortgage notes than I do on my rental properties. So for me, it's very active. But that presentation goes through how you can be an active investor and work with passive investors and vice versa. So I recommend checking that out. I'm not the expert on self-directed IRAs or self-directed accounts. That's Jack, and he's going to speak here in a minute. However, I do use, we work with self-directed IRA and account custodians through our fund, with our fund. And I also invest through self-directed accounts myself. So I'm familiar with them. And, just like a regular IRA or a traditional IRA or Roth IRA, whether self-directed or not, they offer tax advantages regardless of what you're investing in. So um, they offer tax-free or tax-deferred growth, depending on whether that's a Roth or traditional IRA. And uh, you can see here, typically with a self-directed IRA, you're investing in something that's not uh, traditional stocks and bonds. So you're inherently diversifying because of what you're investing in. Um,
Hmm.
all right, Jack, you're up. You want to take it from here?
Sure, Ken. Thank you, Jamie.
Absolutely.
Hello, everyone. My name is Jack Malpass. I am the business development specialist here at Next Generation. We are an administrator and custodian of self-directed IRAs, and my job is to educate investors on how to use their retirement money to invest in alternative assets. And we will discuss what some of those alternative assets are and how you can move your money from your qualified plan that you have now over to Next Generation to do alternative investing. Next, Jamie. Well, disclaimer, we're not fiduciaries nor advisors, so we can't give you advice on any investment. Everything I discuss here is for educational purposes only. Any investment that you're unsure of, please reach out to either a professional advisor or your accountant. So as far as the validity of any investment, that would be your best way to do it. Next. So Jamie is the owner of our company. We are a women-owned company. Jamie's the founder and CEO of our company. Some of our accolades here. Her vision of her company is to provide white glove service, ensuring you have the tools and support necessary to control your financial future by investing with self-directed plans. We do this by educating you on the many options and benefits of self-directing and guiding you through the setup and investment process. It's our 20th year in business as of last year, and hopefully there'll be 20 more. So next. So what is a self-directed IRA? The self-directed IRA allows you to invest in non-traditional assets. The retirement plans, investments in non-traditional assets within a retirement plan have been around since the inception of IRAs from 1974. There's a misconception that for self-directed IRAs that you have to be very ultra wealthy or you have to have a lot of money in an account to do an investment. Okay. When you see what the different types of investments there are, not every one of them has to be a lot of money. Not all of them have to be an accredited or a sophisticated investor to do any type of investment. The great thing about self-directing is that you go out there and you find the investment that you're comfortable with, that you know what you're investing in, and you know what type of return you're getting on your investment. That's what you can do in a self-directed IRA that you cannot do in your regular traditional IRAs or Roths to do traditional investing in stocks, bonds, and mutual funds. Okay, so you kind of get an idea here by going out and finding an investment that you know you are comfortable with and that you know what type of return you possibly can get on the investment itself. Next. So what types of plans can be self-directed? These are just a few. So any of you have any type of qualified retirement plan that is invested in stocks, bonds, mutual funds? These are the different types of plans, whether you have a traditional, a Roth, a SEP, you could have a solo plan. There are covered out plans for kids, for their education, HSAs. If you inherited an IRA from a family member or a friend, you could use that. Some plans for teachers, they're in government, 403Bs, 457s. Usually the plans that you're no longer active with, like a 401k or a 403B, 457s, you have to check with the custodian to see if they'll allow you to use that money if you're still active with that plan. But for this conversation here, the IRAs, you don't have to worry about those. You can use those plans. So these are just the different types of plans. If you have any questions on them, I can give you information on it afterwards. let me know. We can discuss it further.
Yeah, and Jack, correct me if I'm wrong, but we often just say self-directed IRA because that's what people tend to understand a little bit, but
Yeah.
it's really a lot more involved than that, or it can be.
Yeah, but a self-directed IRA with your regular, they use that word,
Hmm.
when you're doing stocks, bonds, and mutual funds,
Hmm.
that you're self-directing your account. Well,
Hmm.
you're self-directing them to choose something from their portfolio.
Hmm.
That's what they call self-directing.
Hmm.
We don't have a portfolio to choose from. Self-directing here means that you go out, you find an investment, and we'll go over what investments um, scenarios that you can do and some that you cannot do,
Hmm.
governed by the IRS. But it's called self-directing. You go out there, you find the investment, you tell us this is the investment I want to do. You let
Got
me
it.
know. I will run it by compliance and we'll take a look at it to make sure that the investment is something that can be held in a self-directed IRA. But it's great because there's no limit into what you can do. And that's what's great about it. You're not stuck to a portfolio that you have to choose from.
Makes sense.
So here's options for how you can fund your self-directed IRA. Like I said, not every investment needs a whole lot of money. If you are looking to do something, an investment that doesn't need a lot of money, and you don't have any types of IRAs or any type of retirement plan, you can open up with a contribution. Depending on what type of plan is the type of contribution that you can do, whether traditional, Roth. Every plan has different contribution levels depending on whether you're self-employed. But again, information that we can really go over. Even if you have an IRA and you want to add more money, you can do contributions uh, for each year. Transfers. If you have an IRA and you have like a traditional IRA and you want to move your funds over to a traditional IRA with us, that's considered a transfer. Two like accounts, a traditional to traditional, Roth to Roth. That's considered a traditional. Again, there's no tax implications because you're moving it from one retirement plan to another.
Hmm.
Okay. Rollovers are usually common with retirement plans like 401s, 403bs, 457s. But however, you can do IRA rollovers. Okay. The big difference is you can only do an IRA rollover once every 365 days. So even though you can do an IRA rollover, you can do a 401k rollover, which you can do a 401k rollover as many times as you want. Okay. So just know the difference. Okay. But a rollover is another way. Direct, the money goes right from your custodian, cuts a check right to us. So there's no middleman. Okay. Indirect, a lot of people know how that works. Your 401k company or your retirement plan company cuts you a check, and you have 60 days to move that check to another retirement plan, or you'll get taxed on the amount that you distributed or rolled over. Okay. The other way is conversions. Anybody who has a traditional account or a tax deferred account who wants to convert it to a Roth, um, going from a tax deferred event to a taxable event is a conversion. Okay. It can be done. Um, some people do it because they make too much money and can't contribute to a traditional or to a traditional and then want to convert it to a Roth. You can do that too. Um, so these are just the different ways that you can fund a self-directed IRA.
Hmm. Yeah, I think this is a key slide, Jack, because a lot of people think, well, I don't have extra money to start to do a contribution, but there are many other ways besides a contribution
Yes.
to get rolling with a self-directed IRA or similar account. And a couple other things I want to point out on this. One, you can have more than one IRA or one Roth IRA, and a lot of people don't realize that you can do a transfer, say from I'm just making this up, but say from your Vanguard Roth IRA to a next generation trust Roth IRA, but it doesn't have to be all of the money from your Vanguard Roth. You could do half of your Roth Vanguard Roth into a next generation trust, and then you have two Roths. Um, that's right, Jack, isn't it?
You can have more than one IRA. That is
Yeah,
correct.
exactly. Okay.
Mhm. Yeah.
Um, and then the other thing to your point of the conversion, just to throw in there, other
Mhm.
things to consider, people may, if you think, well, tax rates, maybe national tax rates are going to go up in the future. I'm not saying they are. I have no idea, but maybe you want to bite the bullet and do that conversion now just to pay the taxes now, or maybe you think you're making, less money now income wise than you will be in the future. Maybe you're in a lower tax bracket. You want to, pay those taxes now and get that over with. So just things to talk to your accountant about. But there are many ways to fund a self-directed IRA.
Yeah.
Um,
The whole thing with the conversion is like you said, it could change your tax bracket by converting a traditional to a Roth because you're going from a tax deferred account to now a taxable event.
mhm.
So depending on how much you're converting, um, it could change your whole tax bracket. And
Yeah.
that's why it's always best to check with a financial advisor or accountant on
Yeah.
any type of conversion you're doing. The
Right.
other thing to keep in mind is when it comes to more than one IRA, is if you're contributing to another IRA, you have to keep in mind how much you're contributing to that plan.
Hmm.
Because let's say on a traditional, you can only do $7,000 if you're under 50 years old.
Yeah.
Well, if you're contributing 3,500 to another IRA, you
Hmm.
can only contribute another 3,500 to a different IRA.
Yeah.
So it's not per IRA, it's all combined.
Sure.
So just
Yeah.
something to keep in mind. And
Right.
again, these are all depends on what you're looking to invest in.
Right.
And best thing to do, talk to your tax advisor when it comes to if you're looking to do contributions
Yeah.
or any type of conversion.
I think too, and we can move on, but I think
Yeah.
just it may seem a little complicated with everything we're talking about right now, but what I take away from this is there are options. It's not all or nothing. It's not like, oh, I already have an IRA, so I can't do a self-directed IRA. There are options that would likely will fit your specific scenario. So there are creative ways to make this work, as opposed to, don't be overwhelmed by all of the ways that may not even apply to you.
Right.
And like Jack said, seek expert advice if you want to move forward.
And later on we'll discuss if you like Jamie said other custodians. If you have a self-directed IRA with another custodian, okay, whether it's a traditional or Roth, SEP, whatever, you could always do a transfer in kind. You could always move from one custodian to another. It's just it's pretty much just changing, re-registering the asset into the new name of the new custodian. So don't feel like you're stuck with the custodian you're with. You're not happy with their fees. You're not happy with the customer service, which, by the way, we pride ourselves on our customer service and keeping our fees within structure of everyone else. But you're not limited to the custodian you're with. If you're not happy with them, we'll be more than happy to talk to you about moving your assets from one custodian to another.
Perfect. And someone did ask about next generation costs, but let's just hold that to the end, Jack, and then you can address that.
Mhm. So on this slide, these are just some of the possible ideas that you can do for as an alternative investment. Now, self-directed IRAs do not hold stocks, bonds, and mutual funds. That's why there's a company like Next Generation that holds alternative assets. Okay, real estate, very popular. The real estate, whether it's multifamily, single family, it has to be an investment property. Your IRA will own that property, and that's what keeps it tax advantaged for you when it comes to investment property. For people who want to be more passive, you can do syndications. So real estate is very popular, all different types, whether it's a REIT, joint venture, partnership. Like I said, investment property, syndications. Your real estate investment is not only limited to domestic, but you can also do international investing also. So if that's you go on vacation and there's a rental property out there that you want to use your retirement plan to buy, you're more than welcome to invest internationally also. So again, mortgage notes, liens, private placements, private stock. Some people don't know they could use their IRA money to invest in precious metals or crypto. So again, these are just some of the different ideas. There's more than just this out there. It's just whatever you can think of that, the sky's the limit on type of investments that you can do. Okay. You could even use your IRA to lend money to other people, like a promissory note. So again, if you have any questions on any of this stuff, I have material on all of it. So we can go over it. There's some couple things that you cannot invest in with next generation. Life insurance is one. Collectibles such as art, cars, things of that nature. Like I said, stocks, bonds, and mutual funds. And cannabis. Cannabis, unfortunately, with us, can't be held in a self-directed IRA. Our charter is held in North Dakota, or South Dakota, I'm sorry. And it's still considered a class 1 narcotic there. So, but other than that, pretty much bring me the idea and we can discuss it.
Yeah, I think that's a key point, is just don't approach this like it's a menu that you pick from.
Right.
It's really like anything goes except for these few things that the IRS or the state, precludes you from investing in.
Yeah, I just want to give people an idea of the different things that you
Yeah.
can do. And
Yeah,
again,
absolutely. Yeah,
so these are the most popular ones that we come
for sure.
across. But again, you it's it's so much out there that you can do.
Yeah, absolutely.
So that how the process works. Opening an account only takes about one to 2 business days. Okay, just a matter of sending me an application. We do electronically. Fill out the application. Takes about 1 to 2 business days. The longest part of the process is the funding. You're moving money from one custodian to another. Could take some time. So always keep the process in mind of the timeline. Okay. So you open the account with me within a couple of days. Once your account is open, I will then work with you to transition you to our transactions team. They will work with you to give you the necessary documents that you'll need to give to your custodian to do either the rollover or the transfer of your money over from your custodian to us. Now, while you're getting your account open, you want to make sure that you contact your custodian and sell off the stocks, bonds, and mutual funds and leave the amount that you need for your investment in cash in your IRA. Okay? You're not distributing it. You're just leaving it in a cash position in your IRA because we don't hold stocks, bonds, and mutual funds. It comes to us as cash. Okay? So our team will work with you on the necessary documents to give them to move the funds over to us. And like I said before, if you have an IRA with another, or you have a self-directed IRA with another custodian, they'll work with you to also transfer in kind any type of assets that you have. Okay. So our team is very good. They'll work with you. They'll answer all your questions. And the last part, we do it in compliance on every investment. So we make sure that the investment that you're looking to invest in can be held in a self-directed IRA. So compliance team takes a couple days to just make sure that all the paperwork is filled out correctly and that the investment is done in the name of your IRA, not your own. And that's pretty much how the process works. So again, guys, this is a great vehicle for you to not only diversify your portfolio, but it gives you the opportunity to do something that you enjoy or that you feel comfortable with doing, as opposed to wondering what's going to happen with the stock market. I have no control over it except for moving my stuff or doing something like this. This all depends on whether you want to be really active with your IRA or you want to be passive. Like I said, you can be, you can own a rental property and be very active, or you can have very passive and get into a syndication or something where you're hands off as much as you want to be. So I thank you guys for listening to me. Jamie, I
Yep.
appreciate this so much. If
Absolutely.
you have any questions, here's my phone number. We're here for you. We answer the phone. Very rarely does anything go to voicemail unless we're in training or we're at lunch. So you have any questions, feel free to reach out to us.
We've got a few more slides here, and then we'll see what questions there may be. Jack, you already touched on this, navigating rules and regulations. There are prohibited transactions as well as contribution limits, depending on your age and the year. We didn't get into the specifics on that, but just know that they exist. And then required minimum distributions for traditional IRAs once you reach a certain age. So there are some rules and strings attached, but as long as you're navigating within those guidelines, you're good to go. Yeah.
Yeah, I go over that kind of information because some people get spooked by the different types of prohibited transactions or disqualified people they work with.
Hmm.
But as my job is to help educate them on who they can and cannot do any type of dealing with. So
Yeah. Perfect. And you all help with maintaining the proper documentation, right?
as far as
Um,
oh yeah,
j-
oh yeah, I have material on disqualified people, prohibited transactions.
yeah.
That's why we get into the weeds about what you're looking to do as an investment.
Right.
Uh,
Gotcha.
and I get all the information and let them know, yes, this is someone you can do a deal with, or you might want to see if you can find someone else to do
Hmm.
this with, or I can't advise them on what they can and cannot do, but
Yeah.
I educate them on what they can and can't do.
Hmm. Right. Right. It's not investment advice, right? But you're,
Exactly. I
yeah.
just can tell them, yeah, you can't invest in, you can't, borrow money. You can't lend money to your father
Hmm.
or your mother.
Right.
Um, but I do tell
Yeah.
them who they can do.
Yeah.
So that's
Gotcha.
yes.
Okay. So, and Jack alluded to this, and I did as well. Um, LabradorLending.com is our site, our website. It's our primary website you can go to. We have solutions for both passive and active mortgage note investors. And again, mortgage notes is our thing. We launched our current income fund. It's called the Integrity Income Fund. That's open now. We launched that in June of 2022. That is for accredited investors only. We have another slide here coming up. It talks about how much percentage of our fund is actually through IRA capital, self-directed IRA money. You can see the slide here. There are many benefits to investing in a fund. Okay, in our case, you need to be accredited. There are other mortgage note funds that you do not need to be accredited to invest in. The point being, we have many different people who in our fund who invest through a self-directed IRA or similar type account. And so you can very much be passive in using a self-directed account and invest in our integrity income fund. So labradorlending.com, we have we have a page for passive investors that you can check out the integrity income fund. Here's some of the benefits of consistent passive income. Our fund it pays monthly. We aim to do our distributions monthly, and we have not missed a single distribution since the inception of the fund. And it pays either 8%, a targeted 8% return annually, or targeted 10% return annually, distributed monthly for accredited investors. And we do all the work as far as working with the custodian to get everything set up, and then also managing the assets, buying the mortgage notes. I can get into the weeds on all of that. There are three parts to running a note fund. It's really finding the capital, finding the notes, and then managing the capital and the notes, the three legs of the stool. But you're not dealing with most of that. You're investing for consistent passive income, and you're putting your capital to work and letting us do the work. Alternatively, you can be more of an active note investor. Jack alluded to buying a rental property, which puts you more in kind of the active side of things versus investing in stocks and bonds. But you can also be an active mortgage note investor and buy whole notes. And again, I point you to my cash flow expo presentation. It goes through everything in between on the spectrum of active and passive mortgage note investing. If you've got more time and energy than you have capital, maybe active investing is the way for you. And we have a mentorship program that helps walk you through how to learn to be a mortgage note investor, an active mortgage note investor. And I see on the call at least one of our mentees. Mark, how are you doing? Um, and so very different from investing in a fund as a passive investor. And our mentorship program is geared toward someone who wants to really put the pedal down and make some real progress at becoming an active mortgage note investor. And one of the ways to invest in mortgage notes is to do so through a self-directed IRA with Next Gen Trust or another custodian. Success stories, these are somewhat generic, to be honest. I personally invest in both mortgage note funds as well as whole notes with a self-directed account. And then Sarah seems very happy here to have achieved financial independence at 40. And then two-thirds of our current investor capital in our Integrity Income Fund, excuse me, Integrity Income Fund, two-thirds of that capital is coming from self-directed IRA accounts or similar type accounts. So, like I said, we have a lot of experience in dealing with different custodians and investors who invest through IRAs because that solves the tax problem, if you will, that comes along with mortgage note investing. And you can read this slide for yourself. Um, so for us, LabradorLending.com is your best resource to check out, and that has information on our Integrity Income Fund as well as our 7 core services, which includes both the Integrity Income Fund and our mentorship. We also have the 74-page ebook that I mentioned early on, and then Jack and Next Generation Trust. Jack gave his contact information for Next Generation Trust earlier. Jack, next generation costs. Can you speak to that at all? Um, did we lose Jack? All right. Well,
Sorry, I was on
oh,
mute.
you're on mute. Gotcha.
Sorry. Annually, for us to be the administrator custodian of your account would run you about $325 annually. And then application fees, $25. There's minimal wire fees and $100 purchase of asset fee. All can be paid by the IRA. The 325 and the 25 is paid up front. And then once your account is open and funded, then wire fees and any other types of fees can be paid by the IRA, or you can leave a credit card on file.
Got it. And then second question, can your IRA own a percentage of the subject property or does it need to own 100%? For example, can your partners or you own 75% of subject property and have your IRA own 25% of the property?
You can partner with your IRA. You can partner with any individual as long as if it's a disqualified person, we can go over who you're doing the partnership with. But it doesn't necessarily have to all come from your IRA. You can partner with someone else. You could partner with your cash, and there's different ways to do it other than just using your whole entire IRA.
That's great. Any other questions for Jack or me before we wrap up? If anyone would like a copy of the slides we went over, feel free to email me if you're okay with this, Jack, as well.
Sure.
Bateman James at LabradorLending.com, and we can shoot you over the slides. Jack, any parting thoughts? Final words of wisdom?
Again, if anybody has any questions on any type of investment, feel free to reach out to me. Again, it's a great way to diversify your portfolios, and I'll do whatever I can to help you guys out. And Jamie, thank you so much for the opportunity. Thank you so much for your service. Much appreciated.
You're welcome. Thank you. And thank you for your time and information, Jack. And to those who joined us, we thank you for spending your time with us. We appreciate that. We know it's valuable. And like I said, LabradorLending.com, go there. You can check out the 7 core services that we offer. We went through 2 of them in a little bit of detail, but we do offer services for both the passive and active investor. And yeah, Jack, thanks again. And to everyone else, thank you. We
My
appreciate
pleasure.
it.
Thank you, Jamie.
All right. Take care, everyone.